tonight? Okay, fantastic stuff. Nice to see everybody in here. We are about, I don't know, 20 seconds away from capacity. If you do not get in, or if you are bounced, you will not be able to get back in. Definitely oversold, which is cool, but I feel sorry for you guys that can't get in. Definitely going to have the recordings posted. I'm not sure if it's going to be on YouTube or some kind of Instagram deal. My assistant's going to work that out, but it'll be over the next few days. So don't worry about that stuff. We'll get it out there. If you fall off and can't get back in, don't worry, man. We'll get the stuff posted. Jim had internet issues yesterday. It went down, and the last half of his presentation was cut. He has a recording backing up, same as I do. So we'll figure out how to get that going for you guys. All right. I think that's it. I think we're at capacity now. The clicker stopped moving. Okay, let's do this. Welcome traders, guests, new returning students. Thanks for stopping by. I appreciate you guys being here. Today is September 10th, 2025. This is Beat the Market Maker with Steve Mauro. Thank you guys for stopping by open house, and my regular students, thank you for being here and attending. Appreciate you guys. All right. What we normally do in here, I'm not going to explain everything that we do. I'm just going to do it. But normally doing here is we talk about the 5 elements that are important in your life, which is your body and your diet. What you eat affects your body, right? The relationships, the people that are involved in your trading business and your immediate family, right? That matters. People give you shit about the trading business because they don't understand it. It weighs on you. If your family doesn't believe, if your wife doesn't believe, your spouse, significant other thinks you're crazy, you probably are. But that puts a drain and a strain on you developing your trading business. We talk about self-help and motivation because you're the only one in this world that can help yourself. The truth be told, it's on you, man. All of this stuff is on you. And of course, finally, we're going to talk about trading stuff, which is what started all this, the other 4 things in the first place, right? To become out of balance. So that's the kind of the format. We look at the calendar, we start setting up ideas and set goals, how to move forward. We cover all these 5 points regularly in my session. Hopes that you'll map out a plan and execute that plan and move forward in the business. All right, so how I usually start is right here, segment 3-2. We are in the 3rd segment of the quarter, which means the 3rd month of the quarter, or the 3rd segment of the year, the 2nd month of the quarter. There's 69 days down past us for the 90-day cycle. There's 21 days until October 1st, which is the end of the 3rd quarter. There's 112 days until December 31st, 2025, which is the end of the year. And every time I read this, I can't believe we're almost there. And we are on week 10 of 12 of our 12-week cycle, which is equivalent to 90 days. All right, so let's look at the calendar. Let's see what's going on. Okay, so let me grab a pen. Obviously, July is over. August is over, and we're sitting here on September 10th. All right, so if you're brand new in the group, what should you do? Well, it's pointless to start your 90 days at the end. So what makes sense would be to encompass these last couple weeks in September into the 4th quarter, October, November, December. Since December is kind of a bust, listen, if you're a Christmas person, if you're depends on what part of the world you're from, if you honor Thanksgiving or not, but you're going to lose a big chunk of time from Halloween on. It's Thanksgiving, Christmas, and you guys know we go on break about a week before Christmas, and we don't come back till a couple days after the new year. So if you're just getting started on your 90-day cycle, the best thing to do is to lump these last couple weeks of September into it, and just that makes up for Thanksgiving and Christmas because you'll still have a full 90 days going forward. All right, makes sense? That's how I want you to handle it. Send it to me. Okay, so significant stuff in October, right? We're going to lose, pretty sure that's Thanksgiving, right? It's either the 3rd or 4th Thursday, I don't remember, but you're going to lose that week. I probably won't have a session on the 26th because that's the night before Thanksgiving. Not sure what I'm going to be doing, but I'm not going to be doing it with you, whatever it is, all right? And then Christmas, I think we usually break. The 17th is probably going to be my last teaching day, and then we'll bust out here into New Year's, and then we'll get back started. This will probably be what, 1, 2, 3, 4, 5, 6. The 7th will probably be my first day back in January. So that's what we're looking at for the rest of the year. Now, looking at this, you should be like, oh shit, I don't have that much time left. I've been screwing around, keep promising I was going to send stuff to Steve and do the homework that he asked me to do. Now look at me. I'm in a lot of trouble. I realize now there's about 3.5 months left in the actual year, and I haven't even sent him one markup. Okay, if I'm hitting a chord with you, rightfully so, you need to get going, man. Your back is against the wall now going into 2026. All right, why? Because you do not decide your future. You decide your habits, which is the little tiny motions and actions you take every single day. And those little habits decide what your future is going to look like. It's time to finally realize that I've been talking about this crap year in, year out. I'm hoping that I hit a chord with you and something resonates. All right. Back to the book club stuff. We try to do audiobooks. Do not buy this paperback book. Do not read this book. The only way you're allowed to listen to books with me in this group is audio. Why? You got a lot of shit to do. You need to be marking up charts, looking at candlestick formations, understanding setups, using the spreadsheet. You have a lot of stuff to be doing. The last thing I want to hear you doing is sitting down reading a book. You do an audio book when you're at the gym, when you're exercising, going for a walk, driving in your car. That's when you listen to an audio book. You don't physically read the book. So if you're into a book, this is a pretty good book. We did it several years ago. This guy, James Clear, is pretty good. He helps you get yourself into a habit formation mode to where you can form little micro habits, which create the bigger scheme. Everything that I talk about, right? Your daily activities create your week, create your month, and it creates how things play out. All right, quick check. Someone's saying they can't hear me. Do you have audio? Please just put a quick Y in the chat. Yes. All right, you, brother. And I know you can't hear me to tell you, but if you can't hear me, can't help you. All right, we're good. All right, let's keep rolling. Okay, so hitting the mark: body, diet, relationships, self-help, motivation, inspiration, whatever it is that moves you, keeps you going. And the business, it's trading. These are the 4 or 5 groups, depending if you separate your body and diet, right? Some people separate body and because they go to the gym and do other stuff, and then their diet, what they put in their mouth, separate stuff, right? Here's the question I always get: Steve, if trading's the business, it's the most important thing, why do you list the other 3 items first? Because trading is largely a psychology-based business, and you got to master yourself, your emotions, your family, and all the stuff around you in order to be successful. And it's very hard for you guys to get your head around that. You don't walk up to a chart and start executing trades and think it's going to work. Your family's got to be on board. You got to have a financial backing or a financial plan to get through the lean years. And everybody has lean years. Okay, the lean years is when you're supposed to be doing the work. If you're screwing around just trading demo and you're wasting your time, man. You need to follow a format in order to break over to the other side. The thing that's crazy now is that you can get funded for exorbitant amounts of capital for not that much money, considering. For the $2,000 or $3,000 you're going to put in your account, you're better off leveraging a prop firm. The problem is the prop firms, they got their own shit going on. So you got to find a good one that you know pays out and is reputable, and you need to make sure you have some money to do resets or whatever it costs. Don't blow all your money on an oversized challenge. Save some of your money for resets or whatever it takes if it's your last bit of money. All right? Okay, so the question I get asked all the time in the mail is, what am I supposed to be doing on a regular basis? What am I supposed to get up and do? What's the plan? Okay, just talked about it. You're working on yourself, your goals, your self-beliefs, your strengths, your weaknesses, your doubts. You need to attack those things. Your personal plan for the next 90, and we're going to call it 120 days because we're going to combine the last bit of September, October into the end of the year, especially if you're just getting started. The only way to be successful in this stuff is to take small bites. How do you take small bites? You approach it 1 or 2 days at a time. You say, okay, for the next 24 hours, I'm finally going to do the high-low drill. For the next 3 or 4 days on my platform, I'm finally going to do an aggregate entry model. Try this stuff out. Daily goals rolled into weekly creates monthlies. Monthlies multiplied by 3 months. All of a sudden, you got your quarter. That's it. It's not that hard. But the problem is you go, oh, I'll do it tomorrow. And you lay in bed for hours and scroll on Instagram and post bullshit stuff and watch these things and send me some stuff about some alligator that bit some dude's finger and twisted and almost killed. Who cares, man? That is not going to make you successful. It's one of those dopamine hits that makes you feel better for a short period of time. But you're going to feel better when you start earning and start doing the things that are moving you personally forward in your goals, not giving some other asshole views on the internet. So what I want from you in this group is your refined trading plan. It has to fit your personality. Where are you at on the personality scale? Do you like swing trades? Do you like spot trades? Do you like quick in and out? Are you a scalper? You have to find out where you are in order to get comfortable and to be able to grow as a trader. If you're trading somebody else's swing trading style and you hate it, you're never going to adapt to it and you're never going to be successful at it because it doesn't resonate inside of you. It's got to be easy for you to trade and execute and see it. When you execute a trade, you get nervous or you relax. How do you feel emotionally? There should be some peace when you take a good setup and you know, man, that's right. You shouldn't be second guessing yourself the whole time and then you grab out early, you click out, you go, man, I got to get out of here. I got to take the 5 pips and get out, and it goes for 55 pips. That's the battle that everybody in this business struggles with. How many times you've taken 5, 7, 10, and it goes 55, 75? That's the kind of stuff that you have to reconcile yourself. I can't coach you on that. I could ask you to take the personality test and I could tell you, share your results with me. But if you don't come to terms with it and execute something that works for you inside, it could be a million times different than me, Carr, Jim, or anybody else in the group. But it's got to feel right for you or you'll never be successful at it. You have to own it. Okay? And doing some markups after the fact is bullshit. It's no good, man. You have to execute in real market conditions. And if you don't do that, you're never going to be successful. All right, for my group members, write down where you are, what you need to master your process. What do you believe is holding you back? Submit it to me for review. We'll talk about it. But the process is take the personality test we talked about and find out where you fall into. I think it's on Baby Pips or something. Some psychology says, so listen, you guys don't be emailing me that are not in the group, bunch of your psychology tests. I know you're already going to do it. I see you guys doing that. I see you smug right over there. All right, listen. You're in the group, take the test, especially if you're new, get it over to me. Let's figure out a style that works for you. We got micro flips, bigger trades. We'll find a spot for you that resonates with you inside and gets you to where you need to be. All right, get that over to me before the next quarter starts. Okay, let's get through some of these emails and talk about it. We got some chart submissions, some student stuff we're going to talk about. I think we got some good stuff for tonight. Okay, so why are there so drills? I'm guessing this dude was trying to say, why are there so many drills? I'm not going to give him up. Steve, I've been with you a while. I'm trying to be respectful towards you. Appreciate that, brother. You keep talking about all these drills that I need to do. Can you explain to me why and what's the point of all of them? I'm frustrated with the extra work. I barely have enough time, and I feel like with the time I have, I should be trading. That's exactly the problem in the group, is everybody thinks they should be trading. No one wants to do the work. You're not learning anything from executing without a plan, just taking some shit that looks like a setup. You're never going to be successful like that. But here's the answer. The high-low drill. It develops fantastic entry skills. And I think I have some more of that dude's high-low drill stuff. The always-in drill teaches you how to hold trades longer. If you're afraid to hold the trade and you get out with 5 or 7 ticks and you're not a scalper, you're trying to get 35 or 40, this always-in drill should teach you some calmness. The market's going to do how it do. You put an order on and you walk away, you get the break even and you let it handle how it handles. Your take profit needs to be a fixed number based on what you're taking. If you're doing these quick little trades inside the microstructures, you need to go for 30 ticks. You need to go to break even around 7 to 10, and then you need to trail when it gets in the 25 plus zone, squeeze that thing out of there and get everything you can. All right, I have an example about something that happened to somebody lost their account over this stuff tonight. Back testing or paper trading. I talk about it all the time. Use TradingView for that. They have the best back testing system out there. Why do you back test? What's the point of that? Steve, I ain't doing that shit. I hate all that back test. It's too much work. I got to sit there and submit. I'm not making any money. Yeah, but here's the problem. You've never done the drills and you keep cursing me under your breath. And yet here you are 2 years, 5 years, 6 months, 10 months later with no progress because all you're doing is sitting there trading and you're not creating any discipline. Back testing or paper trading proves out your concepts, gives you where the stops need to go and your targets, and helps you develop a systematic approach based on the stuff that I've shown and taught y'all. Okay, Steve, I need a trade that I can make 35, 40 pips a day. Okay, we got that. I've shown it. Now, why aren't you getting your 35, 40 pips a day? What's the problem? Because you won't do back testing, paper trading, figure out your triggers to get in, what happens when your stops are threatened. That's the kind of stuff this will do for you. Live demo execution. Okay, it's practice, real market conditions, no one's watching, so maybe you fudge it a little bit, you don't do a good job, take some shitty trades. You don't submit those ones to me, you only show me the really good ones. Here's a better way to go about that. Take an inexpensive challenge if you can afford it. Listen, if you can't afford it, don't throw money at it. But take an inexpensive challenge on maybe a $10,000 or $50,000 account. I don't know what those prices are, but they're probably the cheapest ones, right? But what happened is that becomes great practice under pressure because then you're following a set of parameters and rules set forth by these, I don't know what you want to call them, scammers that take your money in prop firm challenges. All right, listen. If you take an inexpensive challenge, it gives you all your P&L. It puts pressure on you to adhere to their rules, whatever they might be. And you feel a little bit of a squeeze because you laid some money out of pocket. That should create discipline and should create a sense of executing really good setups. That's the best way to practice without really funding an account and risk blowing your hard-earned capital. I know times are tough right now. People are strapped for cash. I'm sorry, but that's, it's cyclical, man. Remember this shit was in 08, was doing it, and it's back around again. Bad economy, whatever you want to call it. But if you're trading, making money, you literally can pull money out of thin air, and it doesn't matter what the economy's doing. Your family is shielded. Here you are. You've been with me years and years, and you've been screwing around, not doing the work. And I can tell you exactly who it is because I look and see who sends me homework. And we're back to a bad economy, back to having challenging environment, and this shouldn't even be an issue for you. You should be going to Disney World and traveling on Royal Caribbean, all the new ships. All right, let's look at some student submissions. Hopefully this is sinking in tonight, and you new guys, whether you're in my group or not, you need to follow these ideas and concepts and apply it and do it yourself if you can't afford to be part of the group. All right, listen. I'm going to read this email. Thanks for getting back to me. I believe I've got entries covered. They got me into trades well, but I'm here really struggling with trade management and make sure I actually got paid out. The main issue is I'm failing prop accounts while in profit because of a trailing drawdown. Since it follows my unrealized profit, I end up hitting the trailing stop. Even when I've taken good trades, for example, GC, I have some of his stuff. He had a 5.8 R, but he only took enough to cover his fees. Right after that, he took one loss and the account was terminated. Well, why? Because if he was up 5R, he was up 6.9K if you see the bottom, and his trailing drawdown was 7.5. So he was up 7,000 almost, and then he lost 400, 500, 600 bucks, I guess. He got taken out. Well, what happens? His expectations were too high for what was available to him. And I have his trade. We're going to look at it together. I've since adjusted my ATM to trail pip for pip by 3R, which keeps me safer, but it still often knocks me out. Okay, here's the deal, bro. Are you in here? I don't know if I could see you, but say hey. Nobody else type for a second. All right, okay, brother. Yeah, I see you, man. Thanks. All right, so listen. I think you need to tighten up your expectations. By the way, you're making spectacular box trades. These are fantastic entries, exactly like I drew it. If I drew this, I would just come over to your house and borrow this chart. It's perfect, man. Okay, so some of you that don't know, newer guys in here, what's going on? These are our box trades based on order flow, but screw all that order flow, book map stuff. We draw it ourselves because we understand where it's at. So you got peak formation high, right? Coming off the high, pull back, apex nadir. That's a pretty decent trade, but never got a second leg. He's got a push down into the low, and he's got a nice micro M formation. Right, retested here. He got to stop. Went down here. He was anticipating his TP past here. I don't know where you came up with this number, some arbitrary bullshit. But what happened, bro, is this big thing right here in your way. Yesterday's low. So anytime that you have a take profit beyond yesterday's low or above yesterday's high, you need to pull up, right? If your TP would have been right here, top of the box, right? Understand what's going on here, right? This is another trade right here. There's your micro W, there's your 1-2, there's your box entry right on yesterday's low. I love that trade. It's one of my favorite trades. And then I like to flip the book, sell the hook right back into it. That's a nice sell right there too. Those are awesome setups. They're one of my favorite setups of all time. BT trades, kill. Blue Tracer. Okay, so if you would have pulled up a little bit, you would have got your limit easily. But what happened? They missed your TP. And I don't know where you came up with this expectation. This is right at the previous low swing, right? The expectation should have been in the thick somewhere in here if you're going on this information. So yeah, I know you know that. Yeah, it was fixed. It shouldn't be fixed, bro. TP is never static. It should not be a fix. If you're using a fixed TP of X amount of pips, that's fine. Now, let's say you're going for 30, all right? But if you look at this trade, you could have took 2 30s out of here easily, right? You also, I don't know, like what's your schedule if you put it on and walking away, but you had a secondary trade right there, right? When it decisively closed below the tracer and came back, look at it, threw 3 pins right above the tracer, man, and then just fell out of there. That was another opportunity to get short and to grab whatever you didn't get from here. You would have took it twice in 2 bites. And the thing is, I don't remember your work situation. I don't know if you're watching the screen or setting this stuff up and getting out of there, but I want to make sure that I'm not offending you, because here's the deal. You're making freaking fantastic entries, bro. That's a 0 entry. I don't know if I did better myself on that. I think maybe my wife got one, maybe 1 tick in front of you. I'm busting your chops, man. It's a fantastic entry. But what I need you to do is to be a little, I don't know if the right word's greedy or crazy, or I don't know what you want me to call it, but you need to pull up and maybe take 2 30 bites, right? Are you using a 10 tick stop? Yeah, okay, 7, even better, bro. Fantastic, man. Couldn't be more proud of you. So let's just say using a 7 tick stop. 7 times 3 is 21. 7 times 5 is 35. Go for 30. You're still trading an incredible R value. It's a fantastic number, and you ain't gonna go broke trading 3R, 5R, right? But you gotta read the room, right? Okay, everything here is perfect. Peak formation high, right? You got a high side tracer from yesterday, consolidating below that. You got a nice impulse, pull back into the level. There's an M. This is a better M, right? Right off of the 50 EMA underneath the Mayo, right? All good stuff. But the target should have been right in front of this thing, and you would have spiked right through it, and you would have got every friggin' drop. Other than that, I can't complain. Great trade. The other thing too is about doing tick for tick. You got to be careful, because if it trails up, you're going to scratch out, get squeezed out before you get your number. Just adjust this and be a little more realistic, and you ain't gonna have any problems ever. Remember, I take 25 to 30 and I squeeze at 25 and I try to reel it in and get what I can get. If I get 27, 20, I ain't gonna cry. The trick here, if you're trying to make more money, add a lot. Less exposure in the market, less time in the market is more valuable than holding a trade for 3 days and then can't understand why it reversed or when something happened. I'm not saying that's you, I'm just making an example. All right? But I'm telling you right now, zero entry, one of the best I've seen in a while. But what happened? You didn't get any money. You scratched. And that cost you your account, right? This is the one that cost you your account, correct? Yeah, okay. So there you go. So it cost you money, real money out of pocket. And you had it. It's not like you have no clue, like, oh man, I don't know what the hell I'm doing, Steve. I just randomly. It's not luck. When you make an entry like that, it's not luck. You're killing it. It's just a little more discipline, maybe controlling the greed, whatever you want to call it. And please don't get insulted. It's a fantastic trade. It's one of the best ones I've seen submitted in a while. But you're not the only one getting these entries. And I couldn't be more proud when I see that, man. I get choked up about it. Okay. So I'm hoping this helps. Just figure out, okay, it comes back to doing some of the homework. I think I wrote it down here. Let me see. So, all right. One micro impulse leg, 1 minute or 5 minute chart, 5 to 8 bars, depending on the instrument. Are you trading futures now, bro, or still Forex? Okay, perfect, man. So, and are you trading 6B? Are you trading the currencies or NQ? What are you trading, man? Are you trading gold? All right, cool. You're trading a couple sixes, GC, yeah, CLES. Stay away from NQ, man. If you guys are trading NQ and you're not making any money, stay away from it. Okay, so there's a combination in the group of Forex traders and trading the futures equivalent of Forex and a few other instruments. That's what we're doing now. It became more difficult to get good Forex brokers in US, so we moved on to futures, and we have an array of fantastic, honest brokers because futures are more transparent because there's routing numbers for every transaction. So anyway, listen. So micro impulse, leg 1 minute or 5 minute chart, 5 to 8 bars. Depending on the instrument, you're going to get a good 5 to 8 bar push. So maybe you take 6. That's right in the middle, right? 6 bars. So you should be into your target by 6 bars. And if you're not, then squeeze it and see where you're at. Right? Depends on the instrument. 30 pips is a pretty good estimate for each travel. 10 tick stop, 3R, right? Move the break even after 10 to 15 ticks or pips is seen. And you got to remember there's a context to it. If it's choppy, if it's impulsive, it's just pushing, right? If you get choppy, you can't move to break even too soon because they're going to chop you out. They're going to take you out, and you had the right directional move and directional bias. So that hurts, right? When you make a good trade, you wait for it all night to set up. It shows itself, and then you get squeezed out. And I don't know if you have like, you know, I don't know what the right thing to call it is, like re-entry guts. Just like pull the trigger right back if you know the trade's still good. But what would make the trade still good, right? If they haven't violated the zone. Let me see if I can erase this stuff. Okay, so let's just say, I don't know, for argument's sake, you traded something like in here, right? I mean, you're getting the edge. You can't get a better edge than that. That's the edge, right? So if you were in here and it was chopping around before all this happened, you should be able to choke this up on this impulse and just squeeze out what you can get out. And I know they came all the way back and they got you out right there. That sucks, man. I don't know why your stop didn't adjust in that. That was a good move. You should have been somewhere in here on the stop. But anyway, I don't want to keep beating you up about this trade because the entry was fantastic, and I know you're making entries like that, right? And the other opportunities too is you had some more book flips, right? So you had this last leg right here. The impulse below it came back. There's another micro M structure. You could have took that down into here, and then they pull back here. You didn't really get a good entry here. Not a good entry there for that final end of the day. I don't know if you're putting it on and going to work or walking away, but you had 3 solid trades in here. Solid trades. And that should have been enough. If you would have took 30 times 3 or 20 times 3, you had 60 to 90 ticks for the day, and you would, instead of trying to get it all in one bite. Someone says, what is NQ? It's a futures contract, man. Look it up. Look up futures. Look up NQ, gold. Look up 6B, 6C. Those are the futures equivalent. All right. Okay. So back to here, right? If trail behind, price action, if your R values are okay. I guess the question is, are you putting it on, bro, and leaving, or are you sitting around by your platform and coming back on closed candles? What are you doing exactly? Are you physically present during it? Yes, leaving. Okay, set and forget. Okay, that helps. Then what happens is you have to make a bulletproof trailing stop EA or whatever you want to call it, which is basically how. Are you using NinjaTrader NT8? Okay, cool. Then you just need to go in the ATM scripts and make the adjustments, right? If it's up X amount of pips, then what you need to do is go to break even +1. And then if it goes up 25 pips, go to +10. And if it goes up like 25, 26, 27 around there, then if you're using a TP of 30 or 35, then you need to start squeezing out tick for tick. All right, that kind of stuff. Okay. So learn behavior on your part. You just got to get comfortable with it. If it's choppy, if it's impulsive, we talked about that. Automatic obstacles, right? Do not put your limit beyond these. I don't care if it goes a million pips after the fact. It doesn't matter. Don't put your TP beyond the blue tracers, high or low, right? Beyond the opening line, unless it's right on top of it. So what I mean is, let's say you get an M formation, you get that push into the low, right? And you got, if you have the open price right there, it's going to trade through that, especially if you get the formation, right? But if you got the opening price like somewhere around here, you can't put your TP out here with the expectation that's going to hit it in one swipe. These are high volume nodes in the business, right? If you're looking at volume profile, right? D formation, B formation, whatever you got, or P formation. If you have a D formation, the thickness is here, and usually the open line is going to be right here. So you can't expect price to trade through that formation in one swipe, because what's going to happen? The dealers are going to hit it. They're going to bounce off. They're going to snatch some stops and pull back on some people. Then they're going to take out the trailing stops like they did you. They're going to give you the nanny boo-boo, and they're going to go anyway, right? So you have to wait and be there to manage that. And if you're setting it forgetting, which I think is better, because most people ruin their own setups. So, and I notice you're hitting nice values and good stuff. You just have to make a little bit of tweaks in your stuff, and you're going to be fine, man. I'm sorry you lost your account. I think it sucks. What firm were you with? I won't repeat it. Okay. I got to tell you a story about them, man. If send me an email. My wife was with them, and I'll tell you some shit that just happened. You ain't going to believe it. Okay, so you got to be careful with that, bro. All right, anyway. So put a limit, a few ticks in front of the zones that I just mentioned. Any of the obstacles that are in the way, take your profit there. Then I don't know if you're getting push notifications to your phone to let you know TP was hit or you got trailed out. That's something you could do with Ninja. And then you'll get a notification and you can go back and look for a reentry if you only took 25 or 30. That puts you in a good place, man. You gotta adjust with the technology, man. Technology's gotten better. MT4 is still good around the world, but we have better options now because we're doing futures and the futures equivalent of currency in Forex. Okay, right? Trail behind price action to squeeze out, right? Tick for tick when it gets close to the TP. If your R values are 1 R or less, you need to pass on the trade. What do I mean? If you got a setup right here and you're going to get this entry and you got a bunch of blue trace or open price AR levels and this only equals 1 R, we're not in the 1 R business, man. It's people trading 1 R. Listen, if you're trading 1 R, you're not going to be successful. Flat out, straight up. You don't want to hear it. I'm telling you anyway. 1 R is no bueno, man. A lot of people I hear on the internet now, these younger guys trading 1 R, they don't know what the frig they're talking about. 1 R does not work in a mathematical model, and we are using mathematical models in this business, period. You need to learn how to take 2 R or greater in order to be successful. You understand? Yes, if you're doing 1R, it's kind of like gambling. Because what's going to happen? You're going to spend all day stalking the setup. You're going to get 1 plus, right? You're going to get 1 minus. You spent the day and made 0. What did you net? You entertained yourself. Go to the movies. It's cheaper. Buy some popcorn and hang out with your girlfriend or your boyfriend, right? You understand? We're not in the 1R business. We're in the 2R, 3R, 4R business. But the thing is, you can take 2R, right, 3 times in 3 impulses and have a damn near 0 entry with 0 draw and a 5 or 10 tick stop that you, or 7 tick stop, which you're using. And then you get to break even in 1 or 2 bars. The trade becomes risk-free. And you take 3 of those at 2R, that's 6R. What does that mean? If anybody understands or doesn't understand, if you're 6R for the day, that means you can lose 6 1R trades, which is what your stop should be. 2 to 3 times your risk. I'm saying 2R, but we get 3, 4R easily. If you take 3 separate trades at 2R a piece and you hit 6R net for the day, tomorrow you can lose 6 trades and still be up 3R. Why? Because this is 1R per trade risk with 2R return, right? And if you're trading 3R return, this becomes a 9R. That means you can lose 9 1R trades in a row and be flat break even. That's why 1R doesn't work, because it gives you no leverage and no peace of mind, because you're spinning your wheels, right? You win one, you lose one, you win one, you lose one. In any other mathematical model, you would be profitable. That's a 50% win rate, but with a good mathematical model in R value, you will be successful. In a 1R model, you're a loser. You understand the difference? We're not in this business to hand money and fees and commissions to these guys. That makes sense? It's math. And if you haven't figured it out, you're too emotional about the business. All right, you got to get ice in your veins, and it takes time and practice. All right, obstacles in the way, blue tracer, open AR levels, weekly high, weekly lows, that's a level that needs to be respected. And just, if you see those in your trade, just pull up a little bit in front of them, right? 9 times out of 10, it's going to spike and go through, but damn, if it doesn't do it 9 times, and then when you actually take it, it bounces off of there the wrong way, right? That's how shit goes. You know how it is. All right, always trail your stop behind price action to get that squeeze out of it. The closer you get to TP, you should start squeezing tick for tick. And that's something that you need to work on yourself, some kind of EA or trailing stop, or you can manually move it up. Maybe you get a notification when your stops go to break even, plus a certain amount of ticks, and then you go in there and you start squeezing it. Okay, if your R values are 1R or less, you need to pass on the trade. You're wasting your time. Right, and sometimes failure to return to the level, FTR, they call that failure to return, right? When price comes down and misses the level and you had your TP maybe right here, thinking it would come back to that level, that's kind of what happened to you, right? Is you had failure to return. Where are we at? No, it returned. If you have, like, let's say you're using this as a target and price doesn't hit that level, it would stop here and pull back. That'd be failure to return. Does that make sense? Right, didn't repeat the level. A lot of times, look, these guys repeat the level, right? They repeat the levels. On a microstructure, they repeat the levels. Look, there's a perfect book flip right there. That was a nice sell. Sometimes you get failure return. This is probably a really good long coming out of London Open, man. You got low of the day, below the tracer. They came back, hooked it back, gave you a micro W formation, buy limit order, front of the box, secondary order if you're using that, and then stop out here in no man's land, and then bam, 4 bars and you're done. Go to bed. Call me tomorrow. We'll do lunch. All right, covered those. Okay, next email, next question that came in. I'm sending a plan for execution, upgraded for the setup. Last EMR, you went over the first example where you showed 3 pushes to the high, and it happens to coincide with what happens after my day 2 setup. Ends the run, so I figure if I box the 3rd push, just how you showed us, I'd be able to take a reversal trade on the perceived primary structure like a box top trade. Yes. Thanks for the insights. Thank you for writing. So far, I'd like to trade the secondary structure on day 2 and day 3. Yes, so you're getting that crossover and you're getting a directional move, right? So remember I told you, even on a microstructure, this works. So what you're looking for is the secondary push coming out of an anchor somewhere. It could be an intraday anchor, it could be the weekly anchor, right? It could be the 1 hour anchor. So what do I mean? Okay, you know I always write sell side shit. Okay, when you get an M formation, right? This is one of the ones where they hit the stops, right? They run the stops above and they come back below. Okay, now you need an impulsive directional move to let you know where you are, right? So when this closes below the apex nadir thing and it comes back, now you know you have a directional move. So I want you to buy or sell the first impulse after the directional move is locked. So that would be this, right? The micro M right here. You could do this on a 1 hour chart, 5-minute chart, 15-minute chart, but it's gold. So, and you could take a measured move. You could take what they swept here, let's say 30 pips, and you could anticipate 30 pips, and usually you'll get it like that to the tick, and they'll come back and do it again. So yes, I want you to take that first directional move, and you can take the second directional move. I do not want you to chase the third directional move. Why? Because here's what's going to happen. If you remember, if you can count to 3, right? 1, 2, on the second move, they make almost a 50% to 61% retracement of the first and second leg, which puts it right there, all the way back. So if you shorted here and they came all the way back, you screwed yourself. You didn't take any money. And a lot of people still have trouble identifying where they are in the cycle. But if you forget all the other noise in the world and just trade this leg and trade this retest in the apex nadir, there's 2 trades there for you, and that's all. You can make a living on that. That could be your bread and butter for the rest of your life. It's all you need. That makes sense? You're there. Okay, let me see this chart that came in. By the way, this dude's up 83 ticks. It's beautiful. Look at this grab, man. It's almost like I did it myself. All right, brother, look, let's go over this. Oh, whose trade was this? Was this you too, bro? Okay, this is the epitome of a zero entry because the spread got him in, right? You got to remember when this was here, the sell side was trading over here, man. That's the entry. I don't know if you can get a micro flip any better than that. I haven't had one that good maybe in a day or two, but that epic, brother, epic. So you were buy limit on that, right? Okay, so all the elements that are present here, what do you got? You got consolidation, stop hunt, low formation, fail to swing below the low swing, holding high. This is going to be a straightaway night on a book flip long, right? Okay, so here's your level drawn in here perfectly. I don't know if you drew that, but it's perfect, bro. So is that a tracer? Is that supposed to be a blue tracer? Okay, so when the book flips high, takes out the level, looking for the hook back. When it hooks it back, you box it in, and then you put a buy limit order here, stop loss right here. You got filled perfectly, bro. I don't know if they slipped you down to that level or you got filled like that, but either way, you're a champ. So now, got some good impulse moves. Me personally, I prefer to take this right here to here, and then I like the secondary entry here, right? Limit order, stop out here in no man's land, right? We're talking, this is futures, man. You can use a 10 tick stop and it falls out here in the middle of nowhere. It's a little different on Forex, but this is a really good entry. I like the way you trailed it up here. I don't know if you're doing that manually, but here's the deal. When it starts coming back, you got an outside bar. I can understand getting a little nervous, but then you got another microstructure, right? 1, 2. You could go limit order here and add to the trade, and then limit up here back at the high. But this is a really good place. This is a good place to exit because this became the high with a pullback, and you could trade it back to the high here. Just nice work, man, all around. Are you here? Own up to this one. Fantastic trade, man. Best I've seen in, I don't know, a couple days since the other trade we just looked at. It's a good trade. So here's the deal. I've been around this business for, I don't even want to say, let's just say since 1999. So you do the math. I'm old. But as the technology advanced, my methodology advanced, and the stuff that we learned advanced. As Forex became crappier because of the dealers, we moved to a better venue. You had to hurt me with that number, didn't you, brother? Yes, it's been a while. Okay, listen. We're trading futures now. Some of you don't know. We're trading futures, but we're trading the Forex in the futures contract. We're trading gold, oil, and ES&P mini. Why? Because they're transparency, All the orders are routed, and there's a lot less cheating and scammers in the futures business. So it's easy to find a good broker. All the prop firms are set up, most of them on this side of the world are set up for futures contracts. I know the biggest one, Apex, is set up for futures. They don't do Forex, and I know some of the other firms are futures as well. So if you're hearing this for the first time and you haven't heard from me in a while, there you have it. That's where we're at now. We use NinjaTrader 8 in the group, but you can use any platform you like. Okay, so here's the deal. This is a perfect grab, right? He could have exited here. I don't know how many ticks this is, but let's say you had 30 there and 30 here. You got 60 and you booked some risk here, right? This was a zero entry. You probably risked 5 ticks to make 25 ticks in this, and then you could have grabbed it again, right? Remember, you want your stop where nobody else is trading except the dealers. You don't want your stop in the middle of all this bullshit. That's not where your stop goes. You learn to trade the edge. You trade on the edges, right? That's what we're doing now as a group. You're trading the edge. We call it a zero entry. Okay? You get a zero entry with 2 to 3 ticks drawdown max, and you know within 3 or 4 minutes if it's a good trade or not. If the trade hangs around for 5-10 minutes and doesn't rocket out of there, you're in the wrong spot. Get out. We're taking the same M and W formations I've been talking about forever, but we're taking them on a micro structure in a futures contract. That's how the business has evolved with book mapping and the other tools that are out there now. Do you need that stuff? No. You need to be able to read the chart like it's book map. Okay, this is a fantastic trade, by the way. All right. One more, I think I got of these. Let's see. So, same type of deal, man. Fantastic grab. Is this still you, bro? These look like your charts, so I'm just giving you credit. Okay, so here's what you got. Beautiful setup, right? You got a peak formation high. That looks like a top side move. How do you know? Because they're running the stops. They got trap, even, run the stops right there on a hammer, pull back into the thing, consolidate. What does that do? That makes everybody scared. What happens? How many people were long here, right? Chasing the top side bar, the close, chasing up here thinking, oh, it's a momentum trade. No, it's not a momentum trade. It's a shit trade. You're chasing the high. They shift the zone and go into consolidation, right, to end the day. Now you're stuck. You paid your rollover fees into the next day. Here's the high line. And what do? They punish you. They either got your account by making this run down, or they force you into trouble. So now, how do you get your bias? You identify this as an M. Price closes below the moving averages. You're looking for flip the book, sell the hook. Okay, here's the book. The book is trap side high, consolidation. Flip the book, sell the hook. But you don't want to sell the hook in Asia. You want to sell the hook into the open, right? That's a good trade. Here's another one right here. Sell limit order right there. Boom, front of the box, stop out here, no man's land, bam, impulse, you're out. Okay, flip the book, sell the hook. How do you know? You could hold this trade longer. Why? When this closes below this and this closes below this, you're gold. When 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 this closes below this, you're gold. But wait a minute, the next leg did not close below that. Now you got to start paying attention. Why? Because now you just generated a head and shoulders. A hook, and a hook is a head and shoulder, right? Shoulder, head, shoulder. When this doesn't take this out, the trade is over. The only way that the dealers can continue the move is to absorb the lower level in front of the previous level. So they flip the book, you sell the hook. They flip the book long, you buy the hook. If you start noticing the hooks, it will change your trading tremendously. This is some stuff we figured out about 7-8 years ago, and it's been lights out with micro stops and huge lot sizes. Think about this. If you're trading 10 lots with a 30 pip stop and you adjust to this methodology that we're talking about here, you could trade 30 lots with a 10 pip stop and it costs exactly the same risk, but the rewards are exponential and you'll blow your account up. You'll get banned. Especially if you're overseas, you'll get banned. There's nothing wrong with that. Just make sure you get your money out. This is math. If you don't know how to do math, you're in the wrong business. The entire business is math. Math is win rate, math is risk, and math is understanding the relationship between lot size and pip distance to stop. If you could tighten that up to 7, 10 ticks, what will your lot sizes do? If you're trading 2 or 3 lots with a 30 pip stop right now, what would it do for you if you could lower it down to 20 or 15? Would double your lot size, right? So if you cut that in half again, it'll double your lot size again. So now you went from trading 3 lots to trading 10 lots with the same amount of exposure, but you got to do the work. You got to understand how to get these entries. Whoops, sorry about that. Where did I go? There we go. Okay, sorry. I think I got one more chart. Obviously, I just saw it. Okay, so fantastic grab, bro. Fantastic. Stop out here in no man's land. And the trick is you want your stop by getting a micro entry on the perceived edge. This is the edge. This is the edge of the trade, right? And this is the bottom edge of the trade. Let me erase some of this ink. I get too excited. I love this shit. All right, so look. This is the perceived bottom of the trade. And you have this drawn pretty great, man. And then you tightened it up over here just exactly how I would do it, right? You have this stretched out. Perfect. Now, it's rattling in between here. But how do you know that this is going to go sell side? You got moving averages pointing down, peak formation high. You're in day 2, straightaway trade coming out of Asia, right? So now you're looking for flip the book, sell the hook. Okay, you got shifted down. They flipped the book lower, right? They took this consolidation level out, right? They shifted down. Now, what do they got? Higher level long holders trapped, stuck, shifted below. Tease them, act like you're going to get them out. They won't stop themselves out because they have hope. Hope is not a strategy, by the way. That hasn't changed in 20 years that I'm talking about this stuff. They shifted again. You're in profit. They're choking. They lose their trade. And then you got a hook, a micro hook. I wouldn't take that. There's a good hook right there into the low, right? How do you validate? This closed below that, 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 this closed below this does not close. Now you got a problem. Start paying attention. Block that off. Now you're going back long. Think about it. Overnight, consolidation in Asia, consolidation end of day US, wide range swings, bring it in, bring it in, bring it in. That hasn't changed, right? Bring it in, bring it in, bring it in. Create a rattler. Flip the book, you sell the hook. Flip the book, you sell the hook. Right below the tracer, by the way. You took your TP. That one worked out for you. Flip the book, sell the hook. Flip the book, sell the hook. Flip the book, sell the hook. Try to get the flip. You don't get it. That's 3. That's enough. You greedy bastard. Get out. How much you want? It's all there, man. You want to start taking longs, you start looking for the opposite of that. You look for flip the book long, you buy the hook. It's either flip the book, sell the hook, or flip the book, buy the hook. That's all it can be. Everything else is irrelevant. You just got to know how to read the chart. So what I'm telling you is I want you to take the first impulsive move coming off. Man, I'm losing my voice. I love this stuff. Okay, you're looking for the first impulsive move coming off of the consolidation right into the stop hunt. When they close below here and take out this level, that gives you a directional bias for the next few minutes. Right? It comes back. It makes a perfect M formation. This is an M. Twice on Sunday and everywhere else. You box this in. You get your 1-2. Sometimes they don't give you a second leg. That's too bad, man. That's life. This one never gave you a second leg. But this is clearly coming out of London, a clean flip. So let me see. How did I figure this out? Bookmap. Okay. When I started, okay, so here's the deal, man. I've had Bookmap for a long time. One of the guys that's involved with that, his name is Bruce. He's a really nice guy, man. He's from New York. He was in my class 20 years ago. I don't know when exactly. But anyway, Bruce is one of the founders or lead instructor over at Bookmap. So I tried it out. I talked to him. It's a great tool. But once you understand what's going on, there's a thing I call a hole in the book. So the book has color in it, right? It's like bright orange and red for certain orders. And then what I noticed was that when they were about to move price, let's say this was bright red, which means a lot of order flow, right? Bright red. Okay, what I noticed was they were bouncing off these levels. And then all of a sudden, the Bookmap background in my chart is black. So they would pull the order flow away and it would stop right there. And then price would go like that, boom. And then all of a sudden, it would turn back red. It went from black, nothing, to red all of a sudden. So then I noticed that they flip it, they make a hole in the book, allow price to fall through, and they come back and do a micro M. And they put these little, I call them Pac-Man. They look like little bubbles. They look like this. That's a bad drawing, but there's a Pac-Man, right? So what happens is in the Pac-Man, this is all bright red, and then the little slice of it might be green. So basically red ate green, which means sell side controls the book. So when they make the hole and you get a little Pac-Man bubble on there, I realized that sellers were eating the buyers up, which is basically absorption of orders. And then they were opening up a hole in the book, punching price through and coming back to the previous level by putting the order flow that was here that got unabsorbed and restating it on the book at these price points. And they come in and they hit it, can't get through it, hit it, can't get through it. It turns into a micro M or a micro W. And it's the same thing going this way. When I saw this, it was lights out. It was the greatest thing I ever seen in the history of trading. I just like it choked me up. Like if I was going to cry, that would have been the spot right there when I saw that. And there's a little more to the story, but I crunched the chart together. I left it open. There's more to it, but that's how I discovered this. Nobody else understands this at the level that I do because nobody else figured it out. They're just watching order flow on the book. They don't know how to use the book. But the thing is, once you understand, you don't need the book. You're the book. Because you could see this right here, right? Okay, well, there it is right there, plain as day. There it is right there, plain as day. So what has to happen right here at this moment in time to create this in the book in order for you to execute this? All right, it's simple. You have a line. That's why we draw our boxes like this. You have a line of red in the book, right? Price comes over here, it bounces, it pulls back. All of a sudden, they stop the red line and they put a little, let's say right there, they put a little bit and then they pick it back up. So what happens is it's order flows coming in, they're holding the level, dealers defending the level, and all of a sudden it just stops, it turns black, the dealer gets through, right? So basically you have levels built up here, orders, maybe buy side orders to go long, and the dealer's running the stops. So he opens the book, he runs the stops, and he comes back and repeats the level. So those are for the long holders that have their stops at break even already for whatever reason. He scratches them, he takes them out. So now he's absorbed the level, the book turns black, and then he puts all the order flow right back in the book, and then it comes back around and gives you that bounce right into the low. So as soon as you see this and start understanding, it's in order for the trade, right, to continue working, the dealer has to take out the next level. Now envision this picture in your mind and realize, flip the book, nothing here, flip the book, flip the book, flip the book, flip the book. Okay, now we're at a major level from another area, and how much more you want out of there, it's a pretty good run. Now you develop a shoulder head. Now the next move, one or two things has to happen for this to be successful. And that is this. This level has to take out this level by creating this exact scenario right here that I just drew for you in order for price to continue on its downward run, right? But this is a failure swing right here, a failed auction, failed seller's auction. The sellers failed to take the book and create a lower level below the previous low. So when the swing doesn't get taken out and pulls back higher and takes out all this stuff here, you are now buy side in the book. So if you're sitting here and this goes lower and takes this out, the anticipated move is flip the book, sell the hook. Flip the book, sell the hook. Flip the book, sell the hook, failure swing. Now, take out the high side, flip the book long, buy the hook. There's the previous level. Flip the book long, buy the hook. Flip the book long, buy the hook. That's how you get longs. If you can deal in these little sections of the chart, which is what I spent the last 8 years perfecting like a master, and I've shared it with everybody in the group, if you can grab that, it is an absolute 10-tick stop, 5-tick stop, 7-tick stop game. You just change the game from a 20-tick stop to 5 or 7 ticks. You exponentially increase the available lot sizes to you, which 10x's any type of gain with a 10 or 20 or 30 pip TP. Now you're going from making 500 to 5,000 a trade because you went from a couple of lots to 10 lots. You turned yourself into an ATM machine every single trade. It just becomes a matter of self-discipline and understanding what the hell I'm talking about this book stuff. Now, you do not have an order book in Forex, and MT4 is not available. Why? For some reason, the Forex cartel, and it is a cartel, they don't want order flow visible because there's too many brokers, there's too many open sources of funds. However, the United States futures market, the London futures market, and the Asian futures market is highly regulated. These are trackable instruments with order numbers, and you could see the order flow. Once you could see the order flow and you understand how to read it, your life is over. It'll never be the same. If you're not getting that tonight, I'm failing you as a person, as a teacher, and as having you as my guest in my home. This should knock you on your ass tonight, and you should not be able to sleep the rest of your life till you figure it out. Okay. Where are we at? All right. Another fantastic entry. I don't know if I went over that one already. No, I don't think I did. What a grab, bro. Is this you too? You're killing it. All right. So right at the front of the box grab that stops out here in no man's land. How do you know that that's no man's land? Because if you're trading the turn bars, the edge of the market, any stop below that turn is gold. Where's the stop right here? You could put a stop right there and it ain't getting hit, man. That's a turn bar. How do they turn that? There has to be some amount of order flow great enough to absorb that hammer, push it back up to close as a hammer, and give it that impulse out of there, right? Where's the turn here? You see the turn, right? What has to happen here? Price has to come down, has to get rejected by a massive amount of order flow. Pac-Man's in here eating it up, push it back down. They come again, they go, nope, can't have it, man. And that is off of the previous bar. The lines are in the book. They push it down and it pulls back to here. This happens in microstructures and macro structures. It's everywhere. What do you think stopped that dead right there? You think it was magic? There's leftover order flow from here. Well, how do you know, Steve? Because that's my blue tracer. I love that line. So now, technically what's going on here is this, right? That's a big box. This is a big, huge W formation. That should give you the confidence to understand. When they hit here, that's your W anchor low. So anything above the apex nadir is gold, and that's where he got it. He nailed it. I couldn't have took this better, drew it better myself. It's fantastic. Right, now look at his R value. What has he got, about a 5 pip stop right there? And I'm guessing maybe 25, 30, 40 ticks. That's 4R, man. Let's just call it 4R. You cannot go broke trading 4R. You could hit one trade and lose the next 4 in a row and be even for the day. I hope you don't do that. I hope this knocks the crap out of you and you realize that you're doing it wrong. All right, man, it's 8:06. Anybody tired of me yet? I'm getting old, man. My voice gets raspy about an hour in. Here we are. All right, I'm going to hang a little bit longer. Everybody good with that? If you need to go, if you got obligations, family, I'm hoping the recording holds up. It'll be posted one of these days. I don't know, man. I got an assistant, but I get aggravated with all this stuff, the posting and all the bullshit. It's not for me. It's not my generation, man. All right, some of you guys are staying awake. All right, man. Okay, so look. Here's the deal. I said it earlier. Your R values are king, right? You're almost there. It's R values, R values, R values. 3R in all your trades. Your opportunity has a limited shelf life during each trading day, so you got to maximize it. Your operating hours, once that window passes, you start giving it back by taking unnecessary risk. You need to understand, right? Let me erase all this stuff for you guys. Look, you have to understand, here's your opportunity. This is garbage. This is kind of garbage. We know that from gray box to gray box is where most of the opportunity lies, right, during London. And we know that it goes to about noon in the US, 12 o'clock. That has not changed in my entire lifespan. It probably never will. So your opportunity is gray box to gray box, and it's gray box to noon going into the US session. And you know not to trade this gray box, right? Opening drive and all that nonsense. But if you understand what you're reading and know how to do it, it's tradable, right? There's a flip right there. In order to validate your existing trades for the rest of your life, whether you join me or not, here's the deal. You look for the flip the book, you buy the hook. In an uptrend, how do you know it's an uptrend? You got a 1350 cross trading back towards the Mayo. Okay. How do you know when the book flips, Steve? When they flip the book, you buy the hook. You don't take the hook on the first pull. Instead, you use the first leg to give you a precision entry. You draw a box exactly how this gentleman has done, like a master. You draw a box based on order flow stuff and stuff that we talk about in the group, how to draw a box perfectly. You put a buy limit order here. You do not do market orders. Market orders are the old school method. A catch-up close is old school. I was teaching that 10 years ago because I did not have these tools. The tools and the market have changed the game exponentially for me and everyone in the group. And if you're in the group and you're not appreciating this stuff, I don't know how to help you, man. I've been doing this stuff for half my life and I'm so freaking excited. I love it every day. I can't get enough. If I was ever going to have an affair, it would be an MT4 platform in Ninja Trade 8. That's what I'd go out with. But never. I love my wife anyway. So look, here's the deal. Once the book flips, they take out the level. You're looking for the pullback. The first pullback, okay, is you're going to give you the first leg. You take the first leg, you look for the rejection part of the candle right there. See, that's what that looks like. I covered it with my crap. Okay, if this, I was expecting a hit to here, I would take the two bodies next to each other. The red one's too low, the green one's in a good spot, and I would box this in like this, and I would extend it out into the future. If the blue tracer was in my view, I would include the blue tracer in my boxing because I know the blue tracer is a trap zone. If the open was in this zone, I would include it. If the weekly high or weekly swing low was here, I would include it. I want to encompass as many leaning points as I can possibly get, and I would aggregate my entry if the box becomes too big. I would put an order, a limit order here, a limit order here, and a stop out here in no man's land. If I trade 10 lots, I go 5 here and 5 here, stop out here in no man's land. Price comes in and gives me a nice pickup, and it's gone. That's this structure I just drew for you, second leg of a W. That's a micro of that. That's a micro of that. There's a hook, no second leg, no trade. You're waiting for that, never repeats. Okay, here's an argument for a downside. Here's the edge of the book. Here's the edge of the book, right? Watch. Pulls back. If this takes out this, your book is sell side. There's leg one, pulls back, leg two, sell it. Limit order, down. From here to here, that's a decent trade. Mayonnaise is in the way. That's just an example, but it's pay attention. It's everywhere, man. Flip the book. This takes out this previous swing high. Okay, takes out the swing high. You're looking for a second leg opportunity, right? One can make the argument that this is a decent one. That's a 1-2. You go limit order, a limit order, no more market orders. They slip you. You're going to get a precise entry with a limit order, no slippage. They're going to fill you right there. In futures, they fill like perfect. They hardly ever slip you in futures unless you're trading news, and that gives them poetic license to do what the hell they want to do to you. You go buy limit order right here. You're out here in a couple pushes, and there's 25, 30 ticks with a 10 tick, 5 tick, 7 tick stop. Game over. Not to mention, as soon as you shift out of there, you're at break even. The risk becomes almost zero on every trade within the first bar or two, if you know what you're doing. If you're still trading in this stuff, I never taught you that, but if you're doing it, I'm sorry, stop doing that shit. All right. Let me get through the rest of these. It's 8:11. I'm talking too much. I usually kill it by 8. Okay. So R values are king, operating hours, right? You have a certain window that you need to execute in when the market's moving. You can't show up at 7 p.m. and trade in the Asian chop zone and think you're going to get something. If you want to trade in Asia, trade Asian futures when they're moving. Trade USD JPY crosses or JPY crosses, or trade Asian futures contracts on the Nikkei, stuff listed on the Nikkei. Same thing for London. You want to trade London? Our futures market works pretty good during London. NQ, gold, ES. ES is a little slower. And oil is very slow because the open pit session is during the US and oil. Don't trade oil in the overnight. It's tough. Tough trading, very slow. Okay, someone said, what does 3R mean? No worries, man. It's 3 times your risk, 3R, right? Your R value, risk to reward. So if you're trading 3R, you're risking 1R, right, to return 3. 1R could be 10 ticks with 10 lots. It could be 30 ticks with 1 lot. But I'm trying to get you to understand that you can make a really tight entry and flip these numbers around. 30 lots with 1 tick, it's a little pushing it, but you can get 5 to 7 tick stop easily. The thing about trading these impulse boxes is that you know right away if you nailed it. Price comes in, hits, pulls out, hits it again, your limit order's picked up, and if it starts doing this shit, kill the trade, scratch it. It ain't gonna go. Understand? Does that make sense? I hope this makes sense to you. All right, so I want to talk about some other stuff. I'm going to move away from this stuff. I'm excited. I've been talking for this almost over an hour. Anyway, listen, I want to get back to the stuff we were talking about, these EAs and this bullshit that was out there a long time ago. Some of you wrote me some emails, you didn't believe it, whatever. So I want to show you something. Now, for you guys that are new in here and first time in here in a while, so we were talking about all these EAs out there, the MT4. They're garbage that do not work. How do I know? Because I was personal friends with the guy that programmed this Jitterbug duplex. I mentioned this last week before I pulled this up, from 2008. Okay, that was the year I got married, by the way. I was old already. This guy invented this. People stole this from him. And this is this Marauder. This is his EA2. Someone put this out in 2023. This is from the same era, 2007, 2008. The guy that programmed this, his name is Pluto. And there's a forum, you probably could look at it in archives and find it's called FXAW, which was Forex Auto Traders World. He invented this. You know how everyone says, oh, I got a programmer, he's a rocket scientist? This guy really did work for NASA, no shit. So when you say, oh, he's a rocket scientist, he really was, and he's a really great guy. I enjoyed being around him, he was nice, but I could tell you that you guys are looking at this stuff and it's crap. But here's the thing. I spent a lot of time trying to figure out how to create these things and how I can contribute to the group. Jitterbug Duplex was supposed to be like a buy grid and a sell grid working simultaneously at the same time. The problem why these things don't work is that the dealer, especially these martingale ones, the dealer shifts the trading zone in 1 bar and doesn't give you a retracement. Those algorithms, or they used to just call them EAs back then. Algorithm sounds all fancy. Oh, I'll show you this $1 million algorithm. Ain't nobody got no $1 million algorithm, or they wouldn't be selling it for any amount of money in the planet. They would keep it to themselves and shut their mouth. They're selling it because there's more money in selling it than there is making it. I can tell you that right now for a fact. I was involved in this stuff 20 odd years ago. So here's the deal. When the dealer shifts the zone and you have a martingale cycle going, you're done, toast. You'll lose 50, 60, 70% of your equity on an MT4 platform in the blink of an eye. Why? Because they give you 400 to 1 leverage, 200 to 1 leverage. Why do you think they give you all that leverage? Because they feel sorry for you? Everyone takes that leverage and over leverages it. And they shift the zone and get crushed. If you're wrong-footed, which you will be, you're getting margined out on those EAs. But here's what I did learn. I did learn that there's some truth that when you're learning to refine your entries at the level I just showed you, that you can use a one-sided grid and aggregate into an order. That's what I was talking about, first order, second order. That came from this grid stuff, right? You can use a weighted order, which they call a martingale, but it's not fair because martingale has no stop. Martingale, you just keep doubling the bet, right? You take 1, 2, 4, 8, right? Then 16. You could see how if trade's going against you, you're going to lose your money quick. That's called a martingale. But what I'm telling you to do, as we were talking about for the drills last week, is find your micro box, your spot, and then maybe kind of quasi martingale with a stop, right? So let's say, let me go back to the chart. Let's say you were going to make an execution here and you're not sure if you got this down yet and you're afraid to get stopped out. So you would put maybe a 2 lot here, right? A 4 lot maybe here, and then a stop out on the whole cycle out in no man's land, right? So now, what does that give you? If they run the stops and spike you, you buy or sell the stop loss level. So if they spike you down in here, they pick up your secondary order, and then you should be able to, the spacing should be good enough that you trade it back to the high swing, and you could take this order off and scratch this order plus 1 or 2, and you made money on the cycle. It's a successful financial short cycle. And then you try to make a better trade next one, right? So let's say that happened to you there. Then you come over here and you got this box. All right, so then you're going to do the same thing. You're going to go, okay, I got a nice hook. They flipped the book here. They flipped the book here. I like my potential for going long. I'm going to put a buy limit of 2 lots here, a buy limit of 4 lots here, and they could be micro minis or what have you, right? And then you're going to put your stop out here for the entire grid. And what's going to happen is they're going to hit you here. They run the stops on this side of the grid. You pick up both orders, and you get that nice clean shift that happens to be a successful trade, and you're out and you're in a good place. You understand? So that's where you're at with this stuff, right? How do you know price will go higher? When this swing opens the book and takes out that swing. You get full absorption of these orders at a higher price. They either ran the stops on sell side or they got more orders off the book in their favor for longs. So then what happens? They hook it. Steve, will it go higher or lower? I don't know yet at this point in time. Why don't you know, Steve? You're supposed to know everything. I need them to flip the book for me again one more time. They break above here and they hook it back. There's another micro W and there's a high side swing. Steve, are they going to go higher? I don't know yet. Well, Steve, you know everything. How come you don't know yet? They didn't flip the book for me yet. I need one of 2 things to happen on a micro level. I need them to hole in the book, pull back, tap the level, go higher. Hole in the book, pull back, tap the level, go lower. They don't return, failure to return to the level, but I still get a nice microstructure in there. Continuation down. Reason why, it's late in the day. There's the end of the day. That's, if you get any takeaway from anything I said tonight, it's draw the boxes on the levels. Flip the book, buy or sell the hook. Flip the book, buy or sell the hook for a microstructure. I just changed your life. Box it in. Box it in. There's a little nuance to boxing in. I'm not going to go over that tonight. I've been over in the group 100 times. Okay, so we're talking about this stuff. So what I did learn is to take the grid element, and since I could read the direction better than anybody else, right? You can read the direction, should be able to read the direction better than most. This stuff right here can't read the direction. It just starts taking orders, right? And then they show this, and like it's so impressive. Really what it is just one shift up, and then it just kind of trickled up there. So maybe it had a good couple of days, and then it just went up. What you want to see in any type of thing, right? This is what sells you right here. Nice smooth equity curve with all green. But I could tell you without a doubt, this guy didn't program this shit. He stole it because I know the guy that wrote it. And I tested it with him. And I know the guy that wrote this. It's this and this are from the same era, 2008. Look up a guy named B-L-U-T-O, Bluto, from like the Popeye comic books. That's the guy that wrote all this shit back in 08, 07. Long time ago. A lifetime ago for some of you. All right. So I said why these don't work, because the dealer shifts the zone in one bar. He'll use a news trigger, and you'll be in a cycle and stuck, and he'll spike that bottom out and take your margin, man. Why? Because we know now, after watching what I just talked about for the last hour and gave myself a sore throat, is that this shit is not arbitrary. It's based on order flow and levels from bookmap. That bookmap on a microstructure shows itself on every single turn bar, every sweep, every stop hunt, every hole in the book to push through, all of it. It's all in there, man. And it's in the chart. You don't need the book to read it. Okay, so here's your assignment. If you're not in the group, don't send it to me, man. Please. I'm working with my own group. You got to be part of the group to me to grade your homework. I know you guys send it to me, hit me up on Instagram, beg me to look at your homework. Can't do it. It's not fair to the guys that paid to be here. They deserve all my attention. And when you're in the group, you'll get the same attention. All right. This is a demo only drill. Do not use real money unless it's someone else's money, prop money. The idea is to sell or buy the stop level with intermediate order, because that's exactly what the dealers are doing to you, right? I talked about this all the time. Once you become proficient, cut it down to 2 orders, 2 lot, 4 lot, etc., like I just drew for you. Work the spacing, become an expert at capturing the high and low swing. Basically, you need to learn how to draw the boxes like I taught, and you need an order here, stop out here. And when the dealer comes into the level, he's going to hit your orders. Okay, stop out down here, sorry. Long or short, doesn't matter. You guys know what I mean. Make sense? Work the spacing, right? Sometimes people put an order in here, 3 orders, they space it out. You could do 1, 2, and 4. What is this based on? Well, we know you can get the bookmap lines, right, down to a microstructure. So you want to get an aggregate entry. So if you do 3 orders, your mid entry is going to be here. Your average price will be in the middle of the box instead of the front of the box. So if they move against you, right, before they come back, you will have a break even here. That makes sense. All right, you can do equal orders. You could do 2 lots, or you could do 1 lot, 3 lot, some type of spacing. If you use weighted, the order will move back closer to your favor. So if you have 1 lot here and 3 lots here, you're going to get a 1/3 fill, which means that the box is into 3/3. This is a 1/3 order. This is a 2/3 order. You will be 1/3 off of the low swing of the entry, and that gives you a break even of a couple of ticks, and you'll be in the profit a lot faster. And then you can TP, move your TP up sooner if that fires. It's just a way to keep from getting stopped out while you're training wheels, right? Work the spacing, learn how to become an expert at capturing the highs and low swings like that, right? Okay. Right, weighted versus the same. I just showed you. You get a better fill. Depending on the instrument's volatility, weighted is almost always better. Maybe not so much in NQ because it's got a lot of volatility to it. You got to have a hard stop out based on the cost and account percentage, man. You can't burn 25% of your account because you don't have the I don't know, the fortitude and the inner strength to stop yourself out. The idea is to keep you from being afraid and help you stay in longer. So if you're afraid to take these tight entries, instead of using a hard stop, here's what I'm telling you right now in the group. If you get in right here and it doesn't work out for you and you're afraid you're going to get stopped out, switch to a secondary order and a stop out here in no man's land. And then what happens is you should not be afraid because you have spacing. So if you grab your order here and it kind of trickles around a little bit before it gives you profit, picks up this order, your aggregate entry will be half of the box and your stop will still be in a good place, right? Then when this order picks up and goes to the top of the box, if your box is 10 ticks, you're plus 10, right? Minus 1 or 2 or minus 0. So you're plus 10 on the cycle. You can close plus 10 and then work this trade as you originally intended. You pick up 10 ticks, move your stop into the money and let it run. The idea is to find a way. If you click out too early, if you're afraid, if you don't trust your instincts yet, how are you going to develop your sea legs? You got to figure out some way to develop your sea legs. So I'm taking this stuff back from 2008, a half grid. And since we know how to catch the edge in the business, we don't need a martingale to understand where the trades go, because the martingale takes it random based on some volatility, right? Used to use the ADX, which is a trendy index. If it was trending, the EA would shut down. If the ADX was choppy, then it would start putting martingale orders on. And then lo and behold, you come out of consolidation in Asia and all of a sudden London opens and price gets spiky, those things get smoked. And there was no way around it. We couldn't figure it out. So you move on in life and you just become a manual trader. Make sense? I promise you right now, if someone sells you one of those things and you buy it, don't put all your money in it. You're going to lose your money. It's not if, it's when. All right, so let's see where I'm at. Let me try to get through the rest of these charts. Okay, this is the dude that sent me his high-low stuff, and I wanted to talk about that. I was talking about order spacing. He did a great job with this stuff. And if you're here, bro, I'm not trying to pick on you, man. You're just one of the only few that sent in the drill, and I appreciate you doing that. But okay, so this trade, I'm not a fan, right? I love this entry. I hate this entry. I love this entry. So what I want you to do, right, is to get better spacing. But here's the deal. You're fading. I understand why you took this trade right here. But what I want you to do is I want you to fade the area. So let's go back for a minute. You started selling into a 2 impulse move, right? Do some math with me. 1, 2, there's 3. You sold on the correct leg, but you got to sell above the last swing. Why? Because he ran the stops and gave you that impulse. When this starts going, you started selling here, you're too low. If you're going to sell anywhere, right? Let me erase it a minute. And listen, I'm not busting your chops, man. You're just one of the only people that did the drill. Okay, this box is stretched out like this, right? Disorder, no bueno. Sell the front of the box, top of the box, and then one out here maybe on Mayo. Now you got a good spacing. You get that nice clean move. Okay, if you're going to use a stop goes here after you get the shift. But I like to see you sell here. This would have been ideal. Look how quick that impulse is out of there. This is flip the book, sell the hook, right? The failure, these swing fails to take that out. This swing fails to take that out and this out. It's even money. Now you're looking at a sell side book. Make sense? I'm not answering the questions because it's scrolling by too fast and it's already 8:28. I'm keeping you guys too long, man. Listen, my regular guys, I've talked about this shit. If you want to ditch, go ahead, bro. I appreciate you being here. I'll catch you. It'll be back to normal next week and we'll pick up where we left off on the lessons. Appreciate you. Love you guys. Have a good night. Okay, the rest of you hang around that you want to stay. I'm going to finish the presentation tonight. Okay, so that's how you got to handle those if you're doing the aggregate entry model. You got to use intelligent spacing and stuff we're talking about in the book, right? So this blue box shouldn't be drawn here. This blue box goes here because that's your third impulse. And you would have had a much better aggregation. All right, makes sense? Okay, you're fading longs on a 2 push move. You need a 3 push move into the high, right? You get a massive pullback here, back down to the level, and then they sweep all the way up again. Crazy, but also keep in mind, end of the day here. You're looking at it linearly moving into the next day, but I like to look at it day at a time, right? I'm looking for this long. But bro, like I said, you're the only one that sent it. I think it's nice work. Okay, so talking about tying all the stuff together we talked about tonight, right? You want to buy the box on the high swing area and then one out there in no man's land, stop out the whole structure, right? You took the stop here. Had you moved this whole spacing up, your stop would be out here in no man's land. Wouldn't even be having this conversation right now. You would have crushed it. And if you caught this right here, you would have hold into the next day, but you get the point. This, in reality, you can't trade this for real money because you're on the rollover, you're going to lose your money. If you're at a prop firm, they take you out an hour before the close, right? Okay, next. Multi-order half grid training wheels, we talked about that. You don't have to fear getting stopped out all the time. I just covered that. You're going to grow into the idea of removing the orders. Here's the deal with that stuff. If you can get good at drawing the boxes and understanding, you're going to hit 90% plus win rate. You've seen some crazy examples tonight, especially you new guys and guys that are visiting. Nobody knows how to make trades with that kind of draw, period, except in this group. Ain't nobody getting 3-tick draw and 1 or 2 of the ticks is spread on a pull. Nobody. And I've been getting them for years. And in the regular group, I've shown my numbers. My drawdown, taking a bunch of trades, my drawdown is like 1 or 2 ticks. Because I get a little bit of a push, I move that stop up quick. And if I caught the impulse, it's gone. And if I didn't, I tap out for 1 or 2 ticks. So anyway, keep it rolling, baby. Okay, so here's what I want you to do. Build a model, employ for a week, right? It's a demo only drill. Don't use real money. Use 1, 2, and 4 orders, 30 pip spread. Mini or standard, I don't care. But I want you to notice doubling is called the martingale system. I want you to try to double your orders. 1, 2, 4, 8. I don't think you should use that many orders. 30 is exactly the stop levels in most non-volatile instruments. The 6s, gold, ES. This is not a suitable model for NQ. Do not trade NQ with this model. You'll get smoked. NQ has a 100 pip candle just minding its business like it's hanging out doing nothing. But the idea of this is going to give you a weighted entry. It's going to make you a better trader. And it should take some of that anxiety and fear you have away from getting stopped out. right? So if you got stopped out, you're not making good entries and you don't understand how the model works. Okay, what else do I got? All right, yeah, I guess that's it for tonight. 90 minutes. I'm really sorry. I enjoy talking to you guys. So here's the deal. You want to be part of the family? Write to support. My assistant will give you the information. support@beatthemarketmaker.com. And if you want to just chat with me a little bit, hit me up on IG. A couple of questions. You can't ask me proprietary shit, man. That's part of the group. It's not fair to the guys that paid. If I give it all to you on Instagram, how does that make my customers that are here with me for years grinding it out? That's not fair to them. That's why, like, if you ask me some messed up stuff, I don't talk about it. I don't answer you. It's not fair. I'm a straight, no bullshit guy. You guys know that about me for 20 years that I've been around. I respect my students. I'm happy they're here and I do everything I can to help them. But if you want to get that attention from me, you got to be part of the group, man. There's no other way to do it. I got a couple people hit me up on Instagram asking me stuff that's proprietary, so I just can't answer it. This is the stuff that I, spent my life developing and teaching, and it's not fair to the guys that are here with me week in and week out, sending me markups and doing the stuff. That's all it is. It's not, oh, Steve didn't answer me, he's an asshole. No, I'm not. You got to understand my perspective on this. How would you feel if you joined the group and found out I was posting this shit all over Instagram for free? It's not right. And I don't do that stuff. I'm an older guy. I have some integrity, man. I've been in the business longer than most of you have been alive. And I'm not trying to rub it in anybody's face like, oh, Steve's old. Yeah, I'm old. But with age comes experience and understanding and also dealing with people. I've dealt with a lot of people and everybody begs me and wants stuff for free. I just can't, out of respect for my members, I can't do it. And I hope that doesn't make you angry. It's just a fact. I don't conduct myself like that. Most of you know how I conduct myself. I try to maintain integrity and fairness in the group. And if I ignore you on Instagram, it's because you're asking me proprietary stuff that I got my life and my lungs invested in. And it's not fair to just give it away to people that are not part of the family. All right. Okay, man, let's see what else I got. I think that's it. Okay, yeah. Here's the deal, man. I'm going to leave you with this. You will never know what you're capable of until you just try. A lot of you are afraid to try. You're afraid to take the step. Why? Because you might lose a couple of trades. It's demo, man. And if you're using prop firm money, it's not your money. It's just your fees. All right, I'm going to end it here. If you have any questions, write to my assistant, support@beatthemarketmaker. I got to go because my throat is killing me, man. I'm going to make my, I don't know, some kind of tea or something. Oh, got ahead of myself on some old charts. Okay, man, appreciate you guys. Members, thanks for staying. New guys, thanks for joining. I really enjoyed seeing you guys max out the go to webinar tonight. And if you fell off and you got back in, I'm sorry. Good night.